This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices mixed this morning. We did have somewhat offsetting economic reports. We did have building permits coming in stronger than expected, over 1 million. However, we did have consumer confidence coming in lower than expected. We do feel that the dominant influence will be the quantitative easing program that the Fed has established several years back. In fact, this is the third QE program. Our feeling is that the QE will continue much longer than most analysts are anticipating. The consensus view remains that they will taper their quantitative easing program at their March policy meeting. Our feeling is that it'll be much later than that, so that remains the dominant bullish influence we feel on stock index futures that will take this market higher through the balance of this year and into next year. Over in the currencies, we did see a little pressure in the pound. This after some comments from monetary officials there indicating that there is some slack in the UK labor market, which argues for interest rates not being increased anytime soon. However, the pound trading higher now, so ignoring that negative, which is a sign of strength for the British pound, we do feel that interest rates are likely to head higher in the UK, and that is a very bullish development for the British pound. So the pound should be the leader to the upside. Over in the Australian dollar, some pressure developing there. This after a spokesman for the Reserve Bank of Australia again talking down the value of the Australian dollar. That has been their policy now over the last several weeks at least, and they have met with some success in that endeavor. And in the interest rate markets, yesterday we saw futures performing very well on some negative news. There should have been some flight to quality long liquidation on the Iran sanctions deal, and yet treasuries held up very well. Also, we had yesterday's 2-year note auction coming in better than expected, and we are seeing futures performing well again today in spite of the bearish building permits report. So from here, look for higher prices in treasuries, and if we are right that the quantitative easing program from the Fed will continue well into next year beyond what most analysts believe, the treasuries market will be supported this year and well into next year as well. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.